Election results shaking the economy as well. To help understand the implications, I spoke with an economy expert earlier today. URI Chair of Economics, Liam Malloy, thanks for joining us today to talk politics and the economy after the election.
My pleasure. Thanks for having me.
So let's start with the more than 1,500 point jump in the stock market yesterday. It was pretty big. Was that to be expected?
Well, I think part of it was due just to having a clear result in the election. So I think part of it would have gone up even if it had gone the other way. But I think another big part of it is probably an expectation of lower taxes. Lower corporate taxes will increase corporate profits, and corporate profits are good for stock prices. So I think that's probably the other part of it.
So President Trump has a fairly controversial plan for tariffs. Some say it's good for the economy, others disagree with that. What will the tariffs look like, and what's your interpretation of this as an economist?
So I think the tariff, what they'll look like, I think is still up in the air, right? It will be interesting to see what Congress and the president decide to do, given that they're likely have be in charge of all the branches of the government. If they, on the one extreme, if they put tariffs on all imports, I think we can expect higher prices for a lot of consumer goods. So that would likely push up inflation. One of the interesting things to think about, though, tariffs, they're a tax, just like, our 7% Rhode Island state tax, which typically we assume are shared between, consumers and firms that are the sellers. With tariffs, there's another piece, which is the exchange rate. And so depending on how much the exchange rate adjusts between the dollar and the countries we are importing goods from, it can have a larger or smaller effect on prices. And then, of course, the other open question that we don't know the answer to is if we put tariffs on all of the goods that we are importing, are other countries going to put tariffs on all of the goods that we are exporting? And so that then could provide a larger negative impact on the economy.
Right. So a lot of unknowns that we'll kind of have to wait and see which policies he actually implements. Now let's move on to the Federal Reserve. There was another rate cut from the Fed today. What can we expect for rate cuts going forward? Are you assuming more are down the line?
So I think the general thought before the election was that we would have a number of these sort of 25 basis point cuts going forward until there was something new that made the Fed change its path. So I think the Fed is pretty happy with where inflation has been over the last couple months, and so they are willing to reduce interest rates. I think the open question now after the election is whether the policies that get put in place starting at the beginning of 2025 are likely to increase inflation. And if they do increase inflation, then we could see these cuts stop and even perhaps go in reverse. But again, that's an open question depending on which policies are adopted.
All right, we will see with time. Professor Malloy, thank you for being here today and providing your insight on all of this.
Thanks for having me.